Have you ever wondered if there's a single trading model powerful enough to give you consistent setups every single day across Forex indices and even gold? A model so precise, it feels like a cheat code built into the market itself. Today, I'm going to break down ICT's Silver Bullet model, what it is, how it works, and exactly how you can use it. And here's the thing, this isn't theory. This is a framework that repeats day after day in the market. By the end of this video, you'll see how the Silver Bullet setup can give you confidence, structure, and clarity when you trade. And make sure you subscribe because this is just the beginning of a series where I'll simplify ICT's most powerful concepts so you can actually use them in your own trading. The Silver Bullet model is all about precision in time and price delivery. ICT discovered that within very specific windows during the trading day, the algorithm behind price leaves behind a consistent and tradable footprint. Think of it like this, the market spends most of the day creating noise. But during these windows, the machine that drives price shows its hand. Those windows are London Open Silver Bullet between 3 and 4 a.m. New York time. New York AM Silver Bullet between 10 and 11 a.m. New York time. New York PM Silver Bullet between 2 and 3 p.m. New York time. 3 windows, 3 opportunities every single day. Before the Silver Bullet fires, price hunts liquidity. That means it takes out obvious highs or lows, previous day's high or low, the prior session's range, or even the previous week's levels. This is essential. Why? Because smart money needs liquidity to enter their positions. When those levels are rated, the stage is set, the directional move and displacement. Once liquidity is taken, the Silver Bullet model looks for a directional move. Price doesn't just drift, it aggressively shifts. This is called displacement. Imagine a wave crashing into the market, leaving behind a very specific footprint, the fair value gap or FVG. That gap isn't just empty space. It's the trail left behind by big money as they enter the market with conviction. And here's the rule, no FVG, no Silver Bullet trade. Market structure shift, MSS. Now we need confirmation. That comes from what ICT calls a market structure shift or MSS. This is when price takes liquidity on one side and then snaps back in the opposite direction. It's not a gentle turn, it's sharp, it's energetic, and it signals that the algorithm is repricing. Think of it like the market flipping a switch. If liquidity was taken on the buy side, price is now likely to deliver lower. If it was sell side liquidity, expect higher prices. The entry. Once the MSS and displacement are in place, the trade entry is simple. We wait for price to return to the fair value gap left behind during displacement. That's the entry point. It's like waiting for the tide to pull back before it crashes again in the same direction. This is also where the optimal trade entry or OTE retracement comes into play. Often the best entries happen around the 62% retracement of the displacement leg. So where do we exit? The Silver Bullet always aims for liquidity pools. That might be the Asian session, highs or lows, a session range, or a higher time frame reference point, like an old weekly open gap. The targets are clean, logical, and easy to spot. In fact, ICT often recommends scaling out at Fibonacci extension levels like 27% and 62%. Time windows in detail. London Open, 3-4 a.m. NY time. During this window, price often raids the Asian range. Once the raid happens, watch for displacement, the FVG, and the entry. The target is usually the opposite side of the Asian range or higher time frame liquidity. New York AM session, 10-11 a.m. This is where the market reacts to the overlap of London and New York. The setup often forms after the first 30 minutes of the stock market open. Price seeks out liquidity from London or from earlier that morning, displaces and gives the Silver Bullet entry. New York PM session, 2-3 p.m. In the afternoon, price frequently retraces into liquidity taken during the morning or lunch session. The Silver Bullet setup during this time is one of the cleanest, often targeting the other side of the day's range. On Fridays, ICT even teaches the TGIF setup where the market can deliver 20-30% of the entire weekly range in this one window. Now let's talk expectations. For index futures like the ES, a valid Silver Bullet setup should deliver at least 10 points. For the NQ, that's around 20 points. For Forex pairs, the minimum expectation is 15 pips. This isn't about catching massive swings every time. It's about trading with structure, confidence, and realistic goals. But here's the truth, knowing the Silver Bullet model isn't enough. You need to trust it, and the only way to do that is through journaling and backtesting. Go into your charts, mark the Silver Bullet windows, and study how often this model shows up. The repetition will build your confidence. In psychology, this is where discipline matters. The Silver Bullet works because it's precise. If you force trades outside the time windows or without displacement, you're not trading the model, you're just gambling. So does the Silver Bullet really work? Yes. Over and over again across Forex, gold, and indices, it's the same model repeating every single day. The market is not random. The algorithm delivers price with precision, and the silver bullet is your way of aligning with it. If you found this breakdown helpful, make sure to subscribe, because this is just the beginning of a full series where I'll make ICT concepts easy to understand and simple to apply. Remember, backtest, journal, and stay patient, because once you see it for yourself, the silver bullet will become the most powerful weapon in your trading arsenal.